What's up, my Mind Your Money business folks? It's me yet again with another video on today's stock market news. And as always, hopefully you are in the market and not trying to time the market, because that is simply impossible to do. So let's get into it. What happened today in the market? It says the S&P 500 retreats from record. Dow falls 200 points with China talks in limbo and Fed decision ahead. Now, in my opinion, since things were at a record high, I believe some investors took profits. That's what I believe. But let's get into the article. It says the S&P 500 closed lower on Tuesday as progress on trade talks with Beijing stalled. So that's not good, actually. And traders brace for the Federal Reserve's rate decision. The broad market index lost 0.3%. The NASDAQ slipped 0.4%. Both indexes touched record all-time highs earlier in the day. They touched it. Then it fell. So the Dow Jones Industrial Average fell 204 points, or 0.5%. Selling pressure intensified in the final hour of trading, bringing the S&P 500 to its low for the day. So investors trimmed some bets. See, told you. It said investors trimmed some bets on risk assess after stocks came roaring back in recent months from their April lows. I told you, people took profits because stocks are at an all-time high. Heavy investors who have millions and billions, trillions of dollars invested, these big investment groups, these hedge funds, they took profits. They trimmed. And they just used the fact that the U.S. and the China talks have stalled a little bit as their reason why. But no, they just took. I don't blame them. If I had billions of dollars invested and I've made hundreds of millions off of my billions because the market's at an all-time high, you're supposed to trim some of your profit, because that's my plan. In the near future, when I make decisions to, say, buy other assets, right? All right, so it says talks with China have been less certain, with U.S. negotiators ending negotiations with their Beijing counterparts on Tuesday, while a potential extension of a pause on higher China tariffs remain up in the air. Negotiators also said that such a reprieve wouldn't be final until President Trump signs off. So traders evaluate some mixed results on Tuesday. Shares of Boeing were lower, even after solid earnings print, as the company delivered the most airplanes since 2018. Procter & Gamble stock inched lower despite a better than expected full-year revenue forecast and the naming of an insider as CEO. Other corporate results have missed the mark, with shipping giant and consumer bellwether UPS posting an earnings shortfall and not using guidance. Whirlpool, I remember the Whirlpool, like, don't they make like washing machines? They missed their second quarter analyst estimates and they slashed their dividends. Now that sucks. I want my dividends. So this week is a key stretch for corporate earnings, with Magnificent Seven names Meta Platforms, Microsoft, Apple, Amazon, all set to report results on Wednesday and Thursday. As it stands, 199 S&P 500 companies have reported their quarterly earnings, and nearly 82% have beaten expectations on earnings, according to fact sheet data. That is a beautiful, beautiful thing. That's why I invest into the S&P 500 through my SPLG ETF. Anyway, so the looming Federal Reserve interest rate decision on Wednesday also weighed on equities. The central bank is largely expected to keep its benchmark unchanged as a range of 4.25% to 4.5%. Investors will also parse a slew of economic data this week, including a reading of gross domestic product and private payroll data due out Wednesday. Wall Street will cap off the data-heavy week with the key July jobs report on Friday. So the market has had a strong run and is now in digestion mode. Some technical indicators suggest a pullback may be coming. A pullback, say Jay Woods, chief global strategist at Freedom Capital Markets. This is a pause, a period of focus on individual names driven by earnings. So hopefully these earnings are strong. So while the broader market watches how the Fed's narrative evolves, hopefully, we'll get some clarity after Wednesday's press conference, he added. So while investors look past the US-EU trade deal, they will be watching for any other potential deals between the US and other countries such as China. Remember that name, China. To be announced by Friday tariff deadline. So the US and the Chinese official met in Stockholm Monday for another round of trade talks. Tariffs and inflation will remain a focal point throughout the week in other areas as well. July's non-farm payrolls on Friday will be a key event for traders. Economists polled by Dow Jones expect the report to show 100,000 jobs added in July, less than the 147,000 added in June. The unemployment rate is anticipated to rise slightly to 4.2 from 4.1%. Get on top of your game, people. You know, now's not time to play around and not be serious. Get your finances, get your house in order. Get your house in order. So let's see what happened to some key stocks today. So Nvidia lost $1.24 today, closing out at $175.51 close. What are you? Who are you? Where did you come from? Okay, close that. Let's see what else happened. Meta. Meta lost $17.63 today. Ouch. Closing out at $700 flat. Apple lost $2.78 today, closing out at $211.27. I'm telling you, people took profit. Investors, these big time investors, not retail investors like myself, and those of you the few viewers that I have, we're just regular everyday people that's buying a couple $100 into the stock market a month, right? We didn't take any money. I didn't take any money because I'm trying to make money. But these big time, these billion-dollar hedge funds, managers, investors, they took profit. Yeah, because there's no reason for Meta to go down $17, but it did. I would take my money. But either way, well, Google earned $3.01 today, closing out at $196.43. My Information Technology ETF, FTEC, lost 36 cents. Not bad. It lost 36 cents, closing out at $206.12. Oh, Broadcom's doing good. Yeah, Broadcom gained $3.12 today, closing out at $297.42. Palantir lost $1.64 today, closing out at $156.24. Tesla lost $4.39 today, closing out at $321.20. IDR gained 2 cents today. I'll take that. Closing out at $7.68. My S&P 500 ETF SPLG lost 19 cents today, closing out at $74.74. Yeah. Again, my IVR, which is Invesco Mortgage Capital, it's a REIT that I recently bought. It looks very attractive. Of course, the more money you have in it, the better, because it gives out a yield of 17.75% in dividends, and it pays quarterly. So, yeah, I'll take that. I'll take that. Yeah, and the biggest holder in IVR, I believe. Dang, who did I find? BlackRock. And, BlackRock is like a $12 trillion investment company. What is BlackRock? What are they? What are they at? Not Blackstone. I said BlackRock. BlackRock. How many assets? Yeah, assets under management. I don't know why. I should have asked ChatGPT. ChatGPT. They have about $12 trillion under management. It was like 10 trillion in 2023. 11.5 trillion in 2024. So more than likely, it's gone up in 2025. Either way, BlackRock has about 5 million IVR stocks. It's all, public information. So actually, according to Yahoo Finance and AI, they own about 6.6 million shares of IVR. So just think of all that money that they're making every quarter. Millions of dollars every quarter of free money just from that dividend payout of 17.75%. Yeah, either way, I'm going to end this video. I'm just talking now. Get out of debt, people, and invest. Invest in something. If you don't want to invest in the stock market because you don't like it, don't invest into the stock market. If you don't want to invest into real estate, then don't invest into real estate because you're scared. At least invest into yourself. But when you invest into yourself, you must have a plan for yourself because you wouldn't be investing into yourself for no reason. So you must have a plan. So make sure that you are investing into some type of retirement fund. You can't create your own, so you have to put money into something that's been created, like 401k, IRAs, the stock market, right, or real estate, gold, silver, a business, right? So make sure that you invest into yourself. But before you can fully invest into yourself and your family, your kids, you have to ensure that you're out of debt. You're out of student loan debt. You're out of car loan debt. You're out of personal loan debt. You're out of credit card debt. You have to get rid of all forms of debt. You dug that hole for yourself, which is unfortunate because a lot of times we don't realize how deep the hole is until one day we wake up, right? And then when you wake up, you're like, what in the hell happened? But just like you got yourself in that hole, you can get yourself out of it. It was easy to get into. Not much thinking, charging that credit card or signing that paperwork. But now you have to put thought behind getting out of this hole. And it's going to require a plan. And that plan is a budget. You have to create a budget in order to get out of the hole that you have dug yourself into. And it can be done, but it will require a lot of focus and discipline and a lot of changes, a lot of selling of a lot of things, a lot of not doing things that you used to do that you thought brought you happiness, because that happiness is what puts you into debt, right? What you thought was going to be happiness. Thinking of just the moment and not what are you going to do at the age of 60, So you have to live life with the future in mind. You can live, but also plan for the days to come. Either way, but you do that by creating a budget. Start paying off your debt, tackling your debt, list them from smallest to largest. To me, it doesn't matter the interest rate. You can continue to make the regular payments on all loans, but start paying off the smallest to largest so you can see that you're actually making gains by getting rid of the debt. Either way, get out of debt. And once you get out of debt, you start investing up to 15% of your income into a retirement plan. So while you are paying off debt, you're not investing any money, right? So then you start putting 15% into your retirement fund. You also put away 3 to 6 months of living expenses. Some people do however much you make a year after taxes, or not a year, but every month after taxes. You can put that amount, times it by 3 to 6 into an account where you don't touch it. Or you look at all of your bills, how much you're paying for rent, mortgage, water, electricity, gas, car payment, insurance, the things that keep your four walls, around you, all those things, the car, the house, and you add that amount together, and then you times that by 3 to 6, and you put that in a fund, and you don't touch it. That's your emergency fund, because when an emergency happens, you want to be able to use that money by using a credit card or some form of debt to get you, into that hole again. So you want to avoid that at all costs. So you put away your 3 to 6 months of living expenses. You invest 15% of your income into a retirement. You put away money for your kids' college fund if you have kids. And if you have a mortgage, now you can start tackling your mortgage. If you don't have a mortgage and you rent, there's nothing wrong with renting. If you want to buy, save up money. Now that you're out of debt, you can start putting away, storing away money to put down on the purchase of a home. Put down at least 20%, finance for 15 years, so you can avoid all that interest within 30 years and paying double the amount for your home. Finance for 15 years. And now, because you have no debt, you can tackle your mortgage. You can pay extra money on the principal, and you can possibly pay that home off in 5 to 7 years instead of 15 years. And then, after you're debt free with no bills, you can live like no one else and give like no one else, like Dave Ramsey says. And I truly believe that, because I currently do that, right? Now you can invest more than 15% into your retirement. You can create a stockbroker's account with Charles Schwab, Fidelity. You can purchase another IRA. You can save up money and buy a vacation home, cash. If you want to buy a new car, you can save money and pay cash. Do everything cash. You have to have a plan with and for your money. If not, you're going to continue to worry and wonder where it all went each month. So do that. And also, while you're doing that, like, comment, subscribe, share this video. Let me know what you think, if you think anything at all. Disclaimer, I'm not a financial advisor, nor am I pretending to be one. So please consult with a financial advisor before you invest any of your hard-earned money. But I got to go. All right, you guys take care. Peace.